Hello, ladies and gentlemen. Greg Mikulowski from ForexLive.com. This is the Kickstarter video. Today's date is December 20th, 19th, I should say, 2020. In the Kickstarter video, I take a look at three of the major currency pairs: euro versus US dollar, dollar versus yen, sterling versus US dollar. From a technical perspective, we've had a lot of fundamental news over the last 18 hours with three central bank decisions. The Federal Reserve decided to cut rates by 25 basis points, but it was a hawkish cut as they slashed two expected rate cuts for 2025 in their dot plot. We saw the Bank of Japan keep rates unchanged, and they weren't exactly any more hawkish for the early part of next year. That sent the U.S. dollar versus yen to the upside, the yen lower, and the Bank of England kept rates unchanged as well. But three dissenting voters who wanted a cut in rates, which was a surprise, and that sent the pound versus US dollar back to the downside after rising earlier on. So let's get started with the technicals. We'll start with the euro versus US dollar. All right, let's look at the euro versus US dollar from an hourly chart. If we go back to this point in November, that was the low for the year. And in trading yesterday after the Federal Reserve rate decision, hawkish rate cut decision, the price fell sharply, falling below the 1.0405 level. I'll talk about that briefly in a second, and moved down toward the low price that we saw back in November, the lowest price for the year. That level came, the low price reached down to 1.035, 1.03399. Just above the 32 level on the downside. And then we started to rebound into the Asian session, continued that rebound into the European session. The high price was able to get above the 1.04053 level, but fell short, just short of this low price back here, going back to November, end of November. That level came in at 1.0424, and you can see the price came just short of that level and rotated back to the downside. Now, I promise I talk about the 1.0405 level, and if you look at the daily chart, and you measure the range since the 2022 low, this to the 2023 high, the 50% midpoint level came in at 1.050053. That was a level that we saw outlined off of that hourly chart. And the price fell below that level in November, running to our low at 33, then rebounded quickly to the upside. And in trading yesterday, the price fell below that level as well. And today's rebound back to the upside, we moved just above it and rotated back up down below it. We're currently trading at 1.03987. So that level is going to be a barometer for buyers and sellers in the short term, I think, for the pair. If the price can stay below that level, that would keep the bias more to the downside. We'd start to look toward the 1.0348 level to, I guess it's like, I don't know, 5.4 or something like that. Those levels correspond with these lows and highs going back in time. I'm getting on the arrow here, right here, here, and here. We came back up to that level, traded above and below the level as you normally do, or oftentimes do, before moving to the upside through here. So we came down to and through that level. And in trading yesterday, we came down toward it, made it a little bit move below that level. And trading today, we are finding some support buyers against that 48 level. So be aware of that level on the downside. But so with the price a little bit below the 1.04055 level, the bias remains a little bit more to the downside. We'll see if that momentum can continue in trading here today. If it moves back above, then we could see further upside probing. With the 1.0424 level, the next target to get through, and then this area up here between 1.0448 and 1.0461. Let's take a look at the dollar versus yen. We'll focus on the hourly chart, and as mentioned, the Bank of Japan kept rates unchanged, but the decision was more of a dovish unchanged in that there was no real commitment toward any sort of rate hike in the early part of the year at least, and that sent the dollar yen to the upside, the yen to the downside. We did break above this high price going back to mid-November, and breaking above that level took the price up to around, looks like around the 19 or so level in as the high for the dollar versus yen. We since rotated back down toward this old high right here, and seem to be trying to find some support buyers against that level. The level comes in at 156.74. Current price is trading 156.82. It might be like the 50% in the dollar versus euro versus US dollar. It might be the barometer for more bullish above, more bearish below in trading here today, or that makes sense From a technical perspective, if we move below, then look for a rotate. Could see a rotation back down toward this old high right here. This level came in at 155.88. As you can see, we sort of sliced through that like hot butter on the way to the upside. So coming back down to retest that level might make sense from a technical perspective, but we still need to get below the 156.74 level to push the price down toward that level. And so watch that level and need to stay below that level. Let's take a look at the daily chart to see what that is telling us. And you can see that the high price that we saw in trading here today takes the price to the highest level. Going back to July 23rd, on the top side, we have this swing area here to contend with or to target. That area comes off of different swing highs and swing lows through here. We moved to the upside from there. It came back down toward that level and then use this level as resistance before moving to the downside. So that area comes between 157.63 and 158.245. We're still a bit of a ways away at 156.87, but moving toward that level. Be aware of that level, above that level, and we start to move into this extreme area up through here where the price reached up to 161.94, rotated back to the downside toward our support area before moving lower. So be aware of this area on the top side for the top side, and we'll be watching this old high right here on the downside as a barometer for trading here today. Finally, let's take a look at the sterling versus US dollar. We'll focus on the hourly chart again. And in trading yesterday, the price fell below this key swing area here. You can see the number of different times that the price came use that level either as support or resistance. It was a pretty decent level. There's very little in the way of not paying attention to that level. So breaking below that level was key. And in trading in the Asian session, we came up to the low of that swing area and did find willing sellers against that level. So it seemed like the price was going to continue its move to the downside, but then broke higher, extending above the high of this area. And then we saw increased momentum to the upside. That momentum took the price back to the 100-hour moving average, also back to this swing area through here, which we have here earmarked. That area comes between 1.26598 and 1.2670. So the sellers came in against this area right through here and found the willing sellers to push the price back to the downside. A Bank of England interest rate decision showed three dissenters. They were looking for a cut that sent the pair even lower and back below this area, but we're now back into the swing area between trading at 1.2606, and this area is going to be our barometer for trading here today. If the price moves above 1.26147, that would be more bullish. If the price moves below 1.2596, that would be more bearish. Flip the coin, folks. So we'll see which way it wants to go. Does it want to follow? Does it want to follow the sterling versus US to a dollar to the downside, or does it want to follow the dollar or the sterling versus US dollar to the upside? We will see. That will be decided in trading here today. So there you have it. A look at three of the major currency pairs to kickstart your trading day. My name is Greg McCloskey. Good fortune with your trading. Bye bye now.